Darin Newsom from DTN is our marketing analyst this week. We talked with Darin on Wednesday morning about his bullish thoughts on soybeans, the demand market for corn, and pricing this spring's new crop. As we spoke, the Dow Jones Industrial Average was on its way to making another all-time top. Yesterday we saw the Dow hit a record high. It's climbing again this morning, but on the other side of that, the ag commodities are not. So I want to ask you, because if you go back not too far, there was a relationship between those two. How closely tied are they now?
I don't know that they're that closely tied at this point. In fact, one of the threats to the commodity markets, agriculture included, is more interest in U.S. equities and pulling money out of what has been a very strong investment movement in commodities over the years. If we start to see that, if the Dow starts to show some sustainability at these highs, I think that is a real threat to investment interest in commodities, gold, crude oil, and certainly grains.
Let's move into soybeans. Brazil is well into their harvest now. How patient should I be if I'm still waiting for something to go higher?
You know, I think if we look at the future spreads, if we look at the way the May contract it relates in price to the July, certainly indicating that the market doesn't really seem to care about all this talk of record production in Brazil, that there is still a great deal of concern over where are the supplies going to come from to meet demand this spring and summer. So I think we can be patient. I think the pieces are in place for the soybean market to at some point move higher. We've got incredible demand still going on. We've got strong basis levels. I think there's still some good demand. I think it's going to be there for a while.
You think the export market is still there? China has basically met, the U.S. has basically met what they need to export that was set out by USDA. Does China still keep buying?
I think so. I think we haven't really seen a huge slowdown yet. Even this week we saw some more announcements of some large old crop purchases of U.S. soybeans. So as long as we continue to see that, as long as we continue to see the spreads and basis act the way they have, I think we're fine on the fundamental side of the market.
Did you expect there to be more volatility once we got into this time of the season with Brazil and the news that we would surely get from either weather or harvest? Did you expect to see more of it?
Actually, it's kind of strange that when we get into a weather market in, say, South America, we're still looking at a time of year here in the U.S. markets where volatility is relatively quiet, because we're waiting for the focus to shift back to the U.S., to shift back to the planting season, the weather markets, and all of this that comes with the actual U.S. crop. So it's not that unusual to see low volatility during the winter, but as the minute we move into the spring, things are going to kick off.
Let's move into corn. You presented today on the overall demand market. I'm just going to ask you to characterize a broad question, but you're talented enough to handle this broad question. Characterize the demand market for corn for me after what we saw in the drought this year.
Demand market for corn is quite simply, we have to have steady to growing supplies to be able to continue to meet demand. The last 3 years, we haven't seen it. So the question is, if we don't see it in 2013, does the demand market come to an end? I think it's a real threat. If we have another weather scenario play out to where there's a drought and we have lower production, I think we could see the demand that's been threatened over these last couple of years simply go away and probably not come back anytime soon.
I'll ask about your expectation for acres, but do you think there's a reason to be bullish now based on what's in supply?
If we look at our current supplies, no, it's very difficult because we have such low ending stocks, and we have an ending stocks to use that's really quite a problem. Again, just as with soybeans, we have very bullish, we have very strong inverse in the future spreads, indicating there's a lot of concerns over supply and demand. If this doesn't start to ease, then there's going to be a lot of pressure to see that record to near record production in 2013.
Confidence in ethanol?
I still think the ethanol industry is going to be fine. If we don't have the supplies this year, could we see another challenge? Could we see another waiver brought up in 2013? Will it have a better chance of passing? I think so.
I want to ask you one quick question on wheat, if I may.
Sure.
Winter wheat, is it, for so long, and I've asked our wheat market analyst this, I've asked why hasn't it run away yet, and the thing he said is it needs to prove it. What's your analysis of wheat right now?
That's exactly right. I mean, traders have bought into a dead wheat crop before, and they always seem to get burned. So anymore, wheat does have to prove that it's simply not there. But the problem is, even in those years where the U.S. doesn't have much of a crop, it's very hard to get the market to rally because it's such a global crop. And so this year, as the winter wheat crop starts to come out of dormancy this spring, it's expected to be in some of the worst conditions ever. Probably lose some acres to corn. But by and large, the market just doesn't seem to care at this time because there's so much wheat globally.
Does it have steam to go up though?
It could go up. it's going to take a lot of help to go up. Right now, that market I think is going to have to follow the others if it's got a chance.
We'll see at the end of the month, the USDA will release its prospective plantings. Do you have an indication of what you think you might see there?
You know, there's all this talk that corn acres could come in 98, 99, 100 million acres. Is it possible? Yes. Is it going to come from, southern plains, northern plains, and far south? Absolutely. Could we see a slight increase in soybeans as well? I think we have to. So obviously the ones that could get hurt, wheat and certainly cotton. So I would think something along those lines, see some increases with corn and beans. Spreads also indicating that that's a possibility.
Any hurry to sell any new crop soybeans or corn?
Since we just went through the pricing period for insurance, revenue insurance here in February, this past February, I'm really not in a big hurry. That's basically the essence of a put option that establishes a floor price. So now let's see what the market does. Let's see if we see our normal seasonal move higher over the spring, early summer to provide some better selling opportunities.
As Darin mentioned, the USDA's Risk Management Agency has now set prices for crop insurance. The marks set from February's average close, $5.65 a bushel for corn, $12.87 per bushel of soybeans, and $8.44 per bushel of wheat.